Good afternoon, everyone. Thank you so much for joining us. My name is Gina, and I'm here today to talk with Ken New with Pinnacle Financial Wealth Management. Ken, thank you so much for joining me today.
Glad to be here.
Yeah, I appreciate you taking the time. And for everyone watching, as you know, 4th of July is an occasion to celebrate America's independence and the freedoms that we enjoy as citizens of this country. So that kind of ties along with the topic that we will be discussing today, which is planning for financial freedom. So Ken, let's get started.
Yeah. So, financial matters in the United States is one of the great freedoms that we have. And, this summer I was in Montana for the 4th of July, and they celebrate, like everyone does, just this whole idea that you can go out and be who you are and do as you please and so on. And there's one big threat, I think, that's worth us talking about to our financial freedom, and that is this thing called inflation. It's all over the place, and there's different opinions about it, and there's a whole lot of information that we discuss when we talk about inflation. And I just really always think, as I've said on previous broadcasts, inflation is just another form of tax. But here's the thing, it affects everyone. And so I think there's the thought process is be prepared for inflation, get motivated about it, and get sound financial advice. All right, we've had inflation. It's been present throughout lots of economic cycles. And there are a couple of bases that I think prepare the average person out there. And that is, number one, have an emergency fund. Have that easy to get to access to funds in case bad happens or there's an immediate need. And then, of course, pay attention to the budget. And that's where inflation comes in and why it's so problematic. Because the budget, how do you budget for something when you have numbers like 9.1% inflation for the month of June? Mm-hmm. That's amazing. That's up over the month of May. That was 8.6%. These numbers, according to the Wall Street Journal, are 40-year highs. And so it's a big deal, and it's first and foremost on people's minds. Give me an example. Gas was up 11.2% in the month of June, an amazing amount. But even more so than that, it's up 60% year over year. So a year ago, it's up 60% from the price then. So these are examples of things that affect everybody every single day. You get in your car, you pump it full of gas, and it costs more money. So those are big deals. And you know what? Inflation makes everything difficult. Yeah, it erodes our savings. Think about it. You put money in the bank, and inflation is driving down the value of that fund. Yeah. How about wages? Wages, absolutely. It affects wages and erodes that. For someone who gets an increase in at many times in their working career, you think about if you get a 1, 2, 3, or a 5% increase, maybe a 10% increase. Those are like, wow, okay, I get a nice raise. But if you had 9.1% inflation in 1 month, well, that's a big deal. Mm-hmm. All right. So the point here is that it affects everything, but not only that, for retirees, it affects their profits. All right. Or any investor, but especially a retiree who's retiring on fixed assets and a fixed cash flow. It also affects the purchasing power of those profits. So it's really punishing everyone. But moreover, what it does is it also creates a higher likelihood of a recession, or at least those kinds of things that can produce it. There's more of a recession fear now than we've had in many, many, many years. And here's why. Simply because when you think about inflation, you know that there's some action out there that the Fed's going to take, or government in general is going to take. And so you think about, okay, so how's that going to affect me? Well, if the Fed is under a lot of pressure to raise interest rates, what does that mean? Well, they're trying to raise interest rates to keep the demand down.
Yeah.
Right? What does a higher interest rate do to the housing market, as an example? Well, if you have higher mortgage rates, then less people can qualify. Therefore, there's less action in that market. And so that's kind of an example of what I mean by how raising those interest rates cause issues for the consumer and across the board too, as well as debt that they hold and so on and so forth. So the more pressure there is on the Fed to do something about inflation, which, by the way, doesn't look like it's going away. And my commentary generally is that inflation is not going away. These economic strife that we have is not going away anytime soon, regardless of what we think might happen, simply because we pumped all this trillions of dollars into the economy that is just made up money. It was just created. And on top of that, we've got a world war going on, the Ukraine and Russia debacle that's going on there. You've got all these kinds of issues that are happening. We're coming out of COVID, or maybe not coming out of COVID, who knows, but that's affected things. And so many businesses were shut down. And so there's a lot of things that are going on that would predict the idea of, well, we've got to take care of inflation, which is an absolute priority, and that will help us create more of a stable economic and therefore a financial marketplace. So we'll pause for a second. What do you think about that?
You know what? I keep thinking about and I don't know if you remember this, Ken, but last year we got on one of these Facebook Lives and it was just about inflation. Do you remember that?
I do.
Yeah, and you remember how you kept talking about how it's just going to get way worse. And I feel like maybe this is at like a breaking point with inflation. Do you feel as if it could potentially get worse than this?
Well, here's the thing. There's been a lot of commentary about what causes the inflation, whether it be the supply chain, whether it be some of the world events that I spoke about. And here's the thing about it is that if the demand is high for a product and there's a short amount of supply, then that's what causes the inflation, or that's one of the primary causes of inflation. And we don't see that going away anytime soon. And it's really not my opinion. There's a lot of major financial institutions that are making the very same statements at this point, that this is something that is still in our future. We still do not have control over it. Look, the control is in the Fed by raising interest rates. Well, we know that raises the likelihood of recession. So now what happens is that we realize that this is in our future. Now, my point of bringing up is that, yes, I agree with you. Again, this year, I am predicting that we continue on with higher inflationary issues, more of a recessionary kind of conversation. These are very real. It's all part of everybody's life. The question is, what do we do about it? Right. What's our defense? What kinds of things can we do? Because, look, what it does is it creates market volatility. Okay, it creates market volatility because investors, they like certainty. Investors and the markets like certainty. They like predictability. They like to understand what the future looks like. And this is very murky. You have very, very smart people on both sides of that conversation that say, yeah, more inflation, less inflation, it'll clear up, it won't clear up. It's going to be around for a while. There's no end in the immediate sight. So what is a person to do? Recognize that volatility is part of it. I'm sorry?
So how can you prepare for market volatility?
Yeah. Well, first of all, number one, recognize that it's a normal part of what we're going through right now. If you go back to they cite the 40-year cycle now, this is the highest in 40 years. Well, what happened in 1981? Well, people still had to get through that period of time. Just like now we're trying to, okay, what do we need to do here? Number one, recognize that there's volatility, and volatility comes both ways, up and down. It's not just, now we're more, we love it when it goes up because we feel like we're getting an increase in that. But it also just contributes to that instability of a marketplace. So, a couple things that are very, very important. Number one, get the proper advice about your investment thesis. Stay the course. That's one thing. If you have a good plan, then stay the course with it. And a good plan is created because you have diversification. And then when the markets do dip, then you have the ability to be able to dollar cost average if appropriate. Okay, now that's not an advice. It's that these are the things that we can do to counteract what's going on in volatile markets. Now, I'll give you an example. Many, many people are in the public market. Okay, that's the NASDAQ, that's the S&P, that's the Dow. It's going to go up each and every day. And you know what? It's going to do what it does, but it is also very manipulated. There's a lot to the public markets. There's futures trading, commodity trading. I mean, there's all these things that are not natural necessarily to the idea of, should I own a certain stock? Okay, should I own a certain sector? How should I be diversified? I'll give you a couple of examples that we do to help hedge when you're in high inflationary times. One is, what goes up when you have high inflation or any kind of rotation of inflation? Well, real estate generally is a good idea to be thinking about. In the private markets, real estate investment trusts own real estate. Okay, and they're typically cash flowing. They have rents, all right? And so, and that type of ownership can be a great hedge against inflation, as well as energy. A couple of very basic ideas. So then to be able to look at those and create that sort of diversification within a portfolio takes really the volatility out of it. Especially when you're looking at tech stocks as an example, that might be significantly down from where they were a year ago. Now, here's the thing, is that I'm happy to help people to understand that type of aspect of financial freedom is the inflation, the volatility that ensues because of inflation, and understanding what's going on in the financial market. Right? So there you have that.
So for anyone watching who really just doesn't understand what market volatility is, can you just kind of elaborate on the term?
Yeah, that's the price action. That's the term that we use in the financial world. The price action means the change in price. So as an example, if something goes down in price, then that's a down value of that. And, we'll see more of that. The next piece that is really somewhat predictable at this point is you're going to see, in many cases, the earnings season will show that companies are doing well with sales, but their profits may not be very good. Well, guess what? If they're having to pay more in wages and their cost of doing business is significantly higher, that's going to be a big deal.
Yeah.
All right. So that's going to also affect then the smart money, they say, or investors, institutional investors look at it and say, oh, better rotate out of that stock. And so that gives you an example of, again, what fuels that volatility, very predictable. And again, if you're in the right type of investment, then staying the course may be the right thing to do regardless of price. If you're not, and it's not designed for this kind of volatility, then that's where you want to get some advice and get some understanding as to whether or not that's the correct place for you to be.
So with trying to understand inflation, I know many people are concerned about inflation with on a national and a global level. How does inflation impact on retirement?
Oh, significantly. It affects everyone. Here's the thing is that a retiree and someone who is living on a fixed income is severely affected when you're thinking about inflation as general. But Now, when you think about specific inflation, which is the cost of healthcare, as an example, that hits those that have that need higher than others. And being on a fixed income, when you start to see the value of a dollar going down in terms of what it's able to purchase, then that's a difficult spot to be in. The average person in the working world can choose to go out to dinner or not go out to dinner. And that can be a savings. That can be a helping hand there. But someone who needs medical advice and procedures and everything associated with the health, they're going to be affected. So there you have it. It really affects the retiree, and therefore the protection of those assets become extremely important. The value of those assets. As well as their production. Just parking money in the mattress doesn't cut it. It's really going to be problematic.
So how can you mitigate inflation's effects?
Say it again.
How do you mitigate inflation's effects?
The effect of inflation? Well,
yes.
you absolutely have to stay the course with your investments as long as they are producing the result that you've asked them to produce. So as an example, if you have a portfolio that is producing a return and that return is typical for that portfolio, then if it's not producing that, then you may want to look at making changes that correct that. If you have a portfolio, and so that's an underperforming asset. So that's number one. In inflationary times, it becomes more important to take a look at assets and make sure that they're doing their job. And so that's an underperforming asset. And that's the money under a mattress kind of example that we're talking about. If it's not earning anything, then the effect of inflation is even higher. And so the other really is take a look at that budget and make sure that you're spending money wisely and necessarily. And so you tighten the strings a little bit. If you have debt, you want to get rid of that debt if at all possible, especially debt that's costing you more than what your money is earning. So those are a couple things that, several things that can help in inflationary times. But look, this too will pass. This will move and phase through, and we're going to see that, by being prudent and staying the course, we find ourselves in a better place at some point in time in the future. Now, when we do that, once we get there, then we also want to take a look at, the whole idea of financial freedom is making sure that we've got the proper kind of planning in place, and asset protection and asset management and strategy is all part of that. But, part of really protecting an asset, and looked at a recent study, and I thought it'd be helpful to talk about here in this month of July, financial freedom here in the United States, is only 4 people out of 10 nationally own a will or a trust. And, forgotten in that when we're thinking about the headlines and inflation and volatility and so on, is the idea that, look, if you have children at home, as an example, at a minimum, you want to have a designated guardian, someone who is appointed to take care of that person especially if an unexpected event happens, like a death or a disability or something like that. So, that's what happens there. Now, look, if you don't have children at home, you still have the need to protect your asset, and especially just from claims of creditors and others, as well as property management, the wealth distribution aspect of your portfolio, but also very important, any healthcare decisions. We spoke a moment ago about healthcare, especially in retirement. And so there's really 4 very important documents that likely aren't in place. If 4 out of 10 people don't have a will or a trust, then, number 1 on those 4 documents is to have a will.
It's funny that we talked about this. Ken, I'm sorry to interrupt. I was just with a girlfriend of mine last night, and her father just had passed away. He had 5 property investment and no will, no trust. It's all going through probate court right now. There's 4 children. And she was telling me yesterday the amount of stress it has placed the family because there is no organization, there's no one in charge. They're all fighting right now. So, and she was just talking about how she wishes he had placed a will or a trust just so it could have made everyone's lives easier. Because it's not just you, it's who you're passing it all on to.
Yeah, absolutely. You had just expressed exactly what we see. This happens more times than people think.
Yeah.
And the challenge is that we don't think about it in the normal course of our day or our life, and the generational changes that have happened over. I mean, there's a great wealth in the baby boomer generation, and as the baby boomers start to pass, then passing that wealth on to the next generation becomes the real challenge.
Yeah, absolutely. And isn't every state different too with the laws, rules, regulations? Like they all have their own laws implemented with estates if there's no will and trust in place, correct?
Yeah, there are. There's state specific. There are some federal laws that are relevant, but every state has really their own version. The essentials, the basic things that are very, very important are to have that will or trust or some kind of instructions. And it can be simple will, even if it's just written down on a piece of paper. It can be very helpful. I coach many of my clients just to write some basic things down, as simple things. I mean, once you do get past the basics, then just helping the next generation get into your computer and knowing what the password is to go in and find out things, if that's how it's organized, and so on. Important to have a durable power of attorney. It's important to have a healthcare power of attorney. It's important to have an advance directive so that your loved ones know what is to happen if you are on life support. I'm sorry?
Okay, go on. I'm sorry.
Yeah, it's just really important to have these kinds of instructions, but that's not intuitive. As you grow older, you just think, well, they know that I love them and that everything's supposed to go to them and so on. But the legal system doesn't work that way. It has its own parameters. And anytime you go into probate court, you open up a whole new can of worms in terms of that money going to your beneficiaries. And as I've said in other broadcasts, not only that, the government is standing there waiting to help confiscate that retirement plan asset, that IRA, that 401k, that money there, once it goes past the marital unit. So between husband and wife, they can pass it on and they can keep it in place for as long as they live. But once it goes on to kids or grandkids or other beneficiaries, no. There's going to be a whole different set of rules there, and they have to empty those accounts out in a very short period of time. The longest they can hold it in there is 10 years. And so, and that could be mitigated with some planning and some communication.
So Ken, how does one choose a beneficiary?
Well, the thing about it is, first of all, you can name your kids and they don't have to be, and they can be young kids, but if they're younger than 18, then they would need to have a guardian because that's who would help them with that asset if you pass prior to them getting to be 18 years. Yeah. Now, beyond that, it can go to a variety of people. It can go to kids, grandkids. It can go to brothers, sisters, nieces, nephews. There's a lot of options there for that. So there's 2 types of beneficiaries. One's going to be a primary beneficiary and a contingent beneficiary. So that primary beneficiary is someone who is first in line. So if you pass, it goes to that primary beneficiary. Now, what that means is they own the asset, whatever it might be, a piece of real estate, it could be a bank account, it could be a brokerage account, but they own it. And if there's no further instructions, they can do whatever they want with it. And if they want to give it to a charity upon their death, then that's where it will go. If your desire is to give it to them first, and then if they pass, it's supposed to go to a designated person, then you want to have those beneficiaries set up that way. All right. So there's some planning to be done with that. And you really want to talk to an attorney and help devise that. We do a lot of that work. I sit with my clients in the attorney's office and we'll talk about, what the pros and cons are. And then we'll get into the terminology to make sure that the documents are set up to express the wishes of my client or express the wishes of that person.
Yeah, that sounds like a lot of extensive, especially for larger families. I feel that would be pretty difficult to choose.
Yeah, it is. There's some complexity there. And especially if you have a special needs within the family, then of course, that sets a whole new set of parameters. Estate planning is part of financial freedom. It is the ability to be able to, at the end of the day, all these conversations that we're talking about, staying the course, investing your money, having an estate plan in place, protecting your assets from claims of creditors and things like that. Why are they so important? Well, because at the end of the day, financial freedom really just gets down to a state of mind. Because, look, on our last day, we're going to leave this planet and we're going to be looking down from the heavens and we're going to be kind of chuckling to ourselves. We were all so worried about the money in that bank account and all the things that are associated with that. And we're going, oh, that didn't matter anymore. You don't take any of it with you. As the old saying goes, there's no U-Haul trailer behind a hearse. It's just all that stuff is left behind. Now, it'd be grand to know that it was left behind the way you wanted and used the way you wanted. And certainly, looking down from the heavens and seeing infighting in the family is not a cool thing, and so on. But really, in kind of a summary with this is the idea that financial freedom is a state of mind, but that state of mind comes from having some certainty. I mean, you can't make that up. When you rest at the end of the day and you're thinking about your financial circumstances, if you owe more than you have, then that's not a warm feeling. So you want that in place. And all the other variations of that. So it really gets down to a warm feeling. And I think for a lot of people, there's a warm feeling when you know where your paycheck's coming from, when you feel comfortable about how your assets are invested and you know that they're not subject to market volatility, things that you can't control. And then you know that on your last day, you know what's going to happen with all that you've worked so hard for all those years and made all that happen. At the end of the day, that it's going where you want it to go and you can just rest and have peace and comfortability. So why not do that during your life? Why not just let that happen in today's world, even with all these circumstances that are going around us?
Absolutely. So Ken, how can we invest for a brighter future?
Well, I think what you do is you do just what you said. You do invest. You don't be frozen. You don't, you want to overcome the fear of, every investor, the first thing is I playfully will have a conversation about investing with clients. They say, yeah, I'm my own worst enemy because as soon as I know how to predict the market, because as soon as I invest in the market, it goes down and I lose money. And so, there's that. And so it's always interesting to get past that and realize that money really is a tool. It's designed to do a job, and that job is to grow and to be used for goods and services or to provide a college education for kids and grandkids, or at its very basic, just say, okay, I want to give this to a charity. I want to give it to the church. I want to do that with it. And I want to have that warm feeling associated with that. Many, many things that we do with it, but at the end of the day, it's just a tool. So realize it's a tool and make it do its job, monitor it, get with an advisor that understands that can help you down that path and understand, when the path changes and how to make those adjustments.
So if you're already feeling financially free, your retirement savings are on track, you have a solid emergency fund, are there any things we can do to help provide freedom for others?
Oh, absolutely. I think one of the first things that you do is you impart your knowledge and your wisdom onto that next generation to help them to understand. And what I'll say about that is that, years and years and years ago, on a personal note, my grandfather, who was a farmer in Montana, self-made man, and I remember growing up and listening to him talk about politics. Mm-hmm. And this is not a political conversation in any way, but he was talking about politics. And his comment is that, whatever they say in Washington, think the opposite. And I always thought, God, what a crass way to be thinking about our great government. Yeah. And I come to learn that he was way more wise than I was able to understand. It's just become a truism for me. So I'm always very analytical about policies and procedures. And, look, we haven't had the greatest of results in terms of, the overall financial circumstances we're in now. But I see the cause and effect. We're printing money. We're creating scenarios that are really self-inflicted. And so, again, it gets down to imparting that wisdom onto the next generation so that they can begin to look at things through a very clear lens and not be swayed anyway, but other than what's in their best interest. And so there you have it. I would lean on that. Impart that wisdom to the next generation. Help them out.
Love it. Well, Ken, thank you so much for joining me. Hopping on this Facebook Live. That was a very
absolutely. Very happy to be here. Have peace in your financial matters because, that's what freedom's all about.
Absolutely. Thank you, everyone, for watching, and stay tuned for our next one. Remember, comment, like, share this video, share this information, very informative information. If you have any questions or concerns, always feel free to reach out to Ken. Very helpful, as always.
Thank you, everyone.
Bye.
Bye-bye.